Right. Good evening to all of you students. Hope I am audible. Uh, Chamath will join in a little while. Aruna, am I clear?
Yes, sir, we can hear you. We can start.
Right. So this is, I'm sure all of you have gone through the pre-scene. This will be a very important session because we will essentially guide you to go through the pre-scene. And one of the thing is, while there'll be comprehensive coverage from both my session as well as Chamath session. However, what you find in the actual exam will be still different. So you have to be really open-minded in an analysis. Great news is that when a pre-scene is released, we request you to take that as a golden opportunity to refresh all the areas of the syllabus, right? So while you prepare for, because pre-scene is a holistic case study, any area of the syllabus can be, most areas can be applied. Even if you look at from accounting standard point of view, this case study covers a lot of areas. So uh, uh, so therefore, it's very important that you really prepare, make this as an opportunity to revise most of the learning outcome, which examiner is going to test this time, as well as, we don't know exactly what will come, but preparation is very useful. Second element is there are still sensitive information in this pre-scene where we can probably see that some aspects can be tested in the exam. So those areas, both Chamath and myself will cover. So until Chamath join, actually he is supposed to kind of start, but that's fine. As he joins, there is a little part here. But anyway, during the first 1 hour of this lecture, I will give you a full coverage in terms of governance, how corporate governance can be tested, right? That's 20% of the syllabus, 15% of the syllabus, corporate governance and non-financial reporting. Then another 20% of the syllabus is on risk of misstatement and internal control, 20 plus 15, 35. And then there is another 5% coverage. I think altogether it comes to about 45, right? This section is a very important section while you're working very hard to do your consolidation, application of accounting standard. Don't forget, if you want to be exceptional students in this paper, you want to be a prize winner, this overall, any students who is able to answer all the questions, and especially who can do well in terms of this area, the governance, control or risk, if you are good in your financial reporting, that you will definitely get a very good results and include in the potential to be a prize winner. So it's not a joke, right? It's all about serious talk for serious students. So if you look at, as we always say, that this area that, it's like iceberg, what will come in the exam may not be, we can't exactly predict, but having said that, there are some information we will draw with close attention, which will be useful to me. So all these slides are nicely done by Chamath. So this introduction section, so which he was supposed to cover, but in the interest of time, I'll take that. I don't know whether Aruna has Chamath joined right now. Not yet, no?
Yes, I will. I'm checking now. I'm checking now.
No, that's okay. I think he was probably he got a call for urgent
Yeah.
matters, so that's okay. I'll
Yes.
continue. So when
Okay.
he's back, we will just let me know. He can
Okay.
yeah, then we can handle. So anyway, initial 1 hour I'm going to take, there's no issue. So let's plan that way. So students, we don't need to waste your time. All of you have gone through the pre-scene, right? So like I said, the purpose of this discussion is to actually deep dive into examinable areas and to see how you have prepared. So Now, if you look at this is a family business, right? And use the chat option, be interactive from the beginning. Can you, in your assessment, what are the companies in the real life in Sri Lanka or globally that you can connect this case study to? What are the companies in Sri Lanka or globally? Please use the chat. I mean, talk, feel free to always connect. You can talk, use the chat option. So can I get some response? Until that comes, let's look at, I mean, these key names and who they are, very important because in the exam, very limited time, that if you are familiar with the case study, that itself really help you to kind of quickly analyze the governance or whatever issues. So one thing that you will see that Stephen, original story of the case study, that Stephen was unhappy with his father's business and he started this business in 1984 as a family business, right? He was not happy with the, culture of that business. So the starting point was 85. They establish the holding company, and that primarily they have the investment property type of business and the imported products. So this was the main company, Safeway Holding. One of the key character in this case study is Stephen. He's a group chairman, right? Can somebody tell me whether Stephen is an independent chairman or not? So we interactive, I'm asking question, we asking question from the beginning. So I also wanted to know, yeah, okay, some students good have already responded. Cargill's, JKH, anyone who can guess about, yeah, very good. I think Sumudini has guessed is Walmart. Yeah, actually this company's vision and Walmart vision is almost same. So, I mean, probably examiner has drawn from different cases to give away. I mean, it's a good case study, but the thing is, if you compare to last exam, this case study is a kind of neutral one. Even in governance area, there are a lot of good stuff. So then there's very limited, there are sensitive points. I'll touch upon those points that you need to really deep dive and reflect upon based on the syllabus learning outcome. So he's a key character. I also asked whether he's independent. You can use the chat. So he's a qualified, well-educated entrepreneur, Stephen. And another thing that you will see, I'll explain at a later part of the discussion, that Indra is little different. And this is very clearly, he is kind of, Stephen very clearly says somewhere that he wants he doesn't want to hand over something and monitor. Right now, for example, delegation and monitoring doesn't work. He wants to really get involved. So there's a lot of involvement, whereas Indra is mostly participative leader. Her style is different. Can this be a risk? Probably we will discuss. Can this be a governance issue where the two segments, when it comes to the group, is a husband and wife, but their management style is very different, which case study acknowledged. I hope you saw that. And then another key character is the friend. I think is not covered in this slide. There's a friend, very close friend, that he wanted to, closely, he trusts that friend. And who is that friend and what business he's leading, I'm sure you know now. So if you look at the yeah. Yeah, so not independent, yes. We will discuss those points. Now look at the evolution of the case study that, after 85, so they started getting into Freshmart, the supermarket business. And then when it comes to 98, it's the key year where they wanted to list and then establish related, businesses like manufacturing and distribution, the hotel chain which Indira is driving, and then the fresh dairy products. That's where I would have thought it's like Cargill's, for example, and the restaurant chain, confectionery businesses, right? So this year is significant in terms of diversifying into more related businesses. And then 99, they also, extending their presence in the hotel business and franchise. You can see in their balance sheet, right to use. So you need to ask whether this include franchise right. Is it a part of intangible from accounting perspective? And one of the big thing that happened in 2017, the case study, can any students tell me that the strategy has changed from 2017? What is that strategic shift in the company? Right? If you carefully read the case study, you would have noted that point. Anyone? So there's a major change in strategy, right? In 2017. What is it? So that obviously it's hydropower investment, but we are also asking what the strategy. So you can talk. And then 2022, there is Express Smart, another acquisition. So now overall, you can see their ecosystem, right? How the types of business they are connected to with the group structure for consolidation purpose. This is a very key slide where things have been nicely summarized, right? Now you see this Albert. Now that's the friend. So he really trusts Albert with 20% shares. He's leading as the CEO of these two businesses, right? And there is a holding company. If you really look at holding companies, just, like a shareholder, pump money to other businesses, right? So we have all of these different businesses, the marketing, hotel, and dairy, confectionery. So this is a reflection and with the share ownership that you can see. And this is the latest development and they want to expand this business more into. So I still didn't get from any students what is the strategic decision. Okay, one student says unrelated diversification. Yes, kind of, but there is another thing actually. More than that, what is that? So just think about it. Then this is another key slide where you really see that this slide summarizes the key players in the business, including directors and their experience, qualifications. The Stephen we already spoke about, the Albert, the best friend, right? Governing two businesses. And as independent directors, we can see Malaka de Silva, independent. He's the audit committee, probably chair. And the nomination committee, again, independent director. So group finance director is a qualified chartered accountant. There's another independent director, Gomez. I think he's the one going to start this power plant. Am I correct? But then, no, this director, Edison Seniviratna, right? He's an independent director, chairs the project committee. But then he's the one who is going to involve in this Haputale project. Now, do you think after that he can be independent? So those issues you need to really see. And this is about wife and then his elder son, especially playing a big role in IT. So now this is all background information that helps you. And obviously from related party angle, this is defined as KMP. Is very important that you understand the transaction with KMP also can be related party transaction, especially from risk of misstatement angle. Remember, related party is a hot topic. There can be transfer pricing issues among these companies, the tax issues, right? And then including some of the SLFRS issues, loan given to related parties. You can see whether those loans are overdue. And when it comes to risk of misstatement, related party, please make a note. Now itself, you can see related party transactions are much prevalent because it's a related diversification and then there can also be transaction with KMPs, right? Now, let me get into, is Chamat, are you back? Maybe not yet. So let me now get into the area, 45% syllabus coverage, right? And now remember this case analysis is a very interesting thing. And now I'm going to give you a framework to remember this case study as a story, not just remember, actually remember is the wrong word, to analyze the case study in a more strategic perspective. That will really help you. And also remember it's a syllabus topic in SL1, non-financial reporting. And I am just reminding you, non-financial reporting is yet to be tested properly. If you look at past papers, this area has not been tested. So therefore, it's good that you will reflect how certain framework like IR, right, or the GRI framework or any other framework can be applied to explain the ESG elements. So just make a note. Now, what is this framework is about? Right now, if you look at the idea here, sorry for the interruption, give me a minute. Sorry for that interruption. So the power behind this is that the entire story of the business can be explained using Six Capital, and you can look at this business, right? How Six Capital works, which company provide the financial capital, right? What are the manufacturing avenues where they used to create value? Sometimes it's not just manufactured capital. It may be the lands, right? The connections. You know, while there is a little manufactured capital, they are using their relationship with farmers to create capital, and that is going to be a competitive edge for them to be profitable. That whole project where they connect with farmers and use in the natural capital to create money is a big thing in this case study, right? See, there is sometimes now in the balance sheet, you see a big amount. Now, while you can see property, plant and equipment, you can also see, they have factories. Sorry, here you have the property, plant and equipment, factories, etc. But they use a lot of intangible capital, like the connection with the people that enable them to bring fresh vegetables, fruits, right? And that the internal people who are doing a lot of research and connect. So through this, they are creating a lot of value using the land of our country, the natural capital. So there's a lot of use of these capitals in their value chain process. And that becomes the input. And this is the business model. And if you look at the whole idea behind integrated reporting is integrated thinking. Please make a note. You have to first think beyond money. So money is just one aspect. Now see, case study talks a lot about they have started teaching institution, research and development, and the mission they say they want to bridge the community gap. So that's all about enriching the society, human beings. So there are a lot of benefits in terms of the human. So that is how the Six Capital works as input as well as outcome. And remember, this is very powerful explanation of IR. So the first thing you must know is, if you look at the non-financial element, it starts with board level integrated thinking. Can anybody tell me what integrated thinking means? Forget reporting. Reporting is just reporting. When there is no thinking, nothing will happen. So integrated thinking is where you are looking beyond profit. In very simple language, let us say triple bottom line, thinking about the environment and society in making those decisions, thinking in terms of Six Capital. And then how do you create value by connecting these elements? The strategy. Now I ask you, what is the strategy of this company? Up to 2017, it has been to grow through acquisition and mergers, right? But in they haven't really focused on organic growth. But in after that power company, they also want to start. That's the main strategic shift. And if you look at the governance, it's largely a family-owned company, while there are some directors, right? But case study specifically says gives some sensitive information that all other companies other than the parent companies are governed by the executive directors. What does it mean? Is it helping to create value or it is a hindrance? You have to see. So with this strategy, governance, performance, and prospects is about future. Now see, in an integrated report, you should be able to show that how these four pieces, right? Strategy, governance, performance is making money. Look at their performance. Revenue is down by maybe 2%, but the profit has dropped by a significant percent. One of the syllabus learning outcome for you to analyze and make sense why this is happening. And actually, Prescient tells you that they want to investigate why this is happening. Possible exam question, right? The prospects is how the future looks like. A lot of risk with the current economic crisis. In that context, right, in the external environment, in Sri Lanka economic condition and global challenges, how do they create value, right? Or are they going to erode value after acquiring that power plant in the short run, medium to long run? Now you will see what I said. So is to create value in the middle, you need to have not only your input, you are doing your business, but you have to essentially operate within this circle. One is you have to get a good purpose why you are in business. That's mission is critical. Go to the case study and see what their mission. Why mission is important. They cannot have a strategy which contradicts with the mission, right? So the mission, having a good mission, then they have to connect the governance, strategy, performance, outlook, right? Outlook connects to risk and opportunity to create value in the short run, medium run to long run. So now I'll apply this to the case study. Now see, if you take similar company, and this is very similar to your case study, now that's why I wanted you to guess, right? Now their core kind of mission statement is food with love. And this is not only Cargill's, now you can Google and check what is the mission of Walmart. Very similar, food with love, core business. Now, one of the risks you will see now they are going to deviate from core business when it comes to say power plants, things like that. And they want to build this business based on these pillars. How do we reduce cost of living, enhance the skill, bridging the regional disparity? Now you can see your company mission is very similar, right? Now I'm helping you. Remember, this is a very holistic analysis. This will help you in many subjects, especially in this subject as well. Especially I am connecting this from corporate governance angle. Now I mentioned to you, if you want to explain non-financial reporting, what are the four elements? Starting with the mission, strategy, governance, performance, outlook, how it creates value. Now, see, we already spoke about mission. Of course, their vision also very much connected, be the destination for customers to save money, no matter how they want to shop, right? Now, strategy, acquiring and merging, as I told you, but there's a big change into after 2017 that we discussed. And then, now see this one, this company, the SWH PLC is the main investor, right? Safeway Group. So they are like the shareholder pumping money. And in terms of social and relationship, we see the networking and partnering with rural farming community, continuous training, right? Knowledge on the latest technology, etc. And the intellectual capital that you can see in the case studies about implementing Industry 4 technology, bridging new technology, right? Smart technology, and they have established IT and research development company. They want to focus on latest food production technology, right? About the human capital, more than 5,600 young workforce working together with a training institute. Natural capital is largely those farming community, the land they have acquired, one of these company invested in rural areas, and now you will apply agriculture standard and see how do we recognize that somewhere in the case study, they say they clear this agriculture, this maybe vegetable every year. And now, as I told you, it's not only vision, mission, strategy, but it's all about governance. Now, this is the part of the governance, 12 directors, including 4 independent non-executive directors. Now, I want to ask you this question. I'm showing only the input, capital, and then these elements. How about the output? Now, I'll just show you for you to activate your thinking. For example, now, like I said, why I'm spending few minutes on integrated reporting as one of the global model for non-financial reporting in addition to GRI framework, which is also popular, is to activate your thinking and to create interest that this area, this chapter you will study, because there's a possibility of being tested. Now, if you look at the way, for example, Cargill is demonstrating them, not exactly under 6 capital, but how do we explain? Now, trusted brand, in terms of their brand, what capital it belongs to? You can use the chat and talk now. Is it which capital? The people development they have done, gender diversity, gender equality, sorry. So now I hope you have heard about EDI, equity, diversity, and inclusion. Those are big topics under uh, this area, especially the social capital related areas, right? And what is this capital? Is it about human capital, right? Is this about intellectual capital? Think about it. Reducing the cost of living, what capital is it about? Enhancing the youth and early development, right? So now if it is going beyond the company's employees about the social and relationship capital, bridging the regional disparity, the same, right? And then what are they doing for the planet? Now see this type of company, renewable energy consumption, and they are aggressively investing in solar panels. They can use their rooftop to have rooftop solar and to make probably net zero, things like that. Please write down this topic. Now, I am just giving you to prepare. If there is a question or if there now, I'm sure you all attended the mock exam that we actually both Chamath and myself discussed with the answer. Now, this question about ESG reporting governance, what do you mean by that? So in ESG reporting, the very first point, please make a note, is to identify material topics. It's not auditor's materiality level. Huh? Material topics, what matters to stakeholder. From corporate governance angle, we call it stakeholder approach to governance. Now, what this company is doing, why they are worried about, for example, water, recycling water. Now you see this type of business, how their water consumption is very high. Water is a natural resources. Depletion of natural resources can be a hot topic, right? And then obviously they are trying to reduce the energy. So what I mentioned to you is one of the big thing in ESG reporting that you have to do as the very first step is to do a materiality assessment and identify material topics, right? So I hope the idea, as I explained to you, is to give you a context in terms of not only integrated reporting, but for you to understand the case study. At the same time, I kind of covered the some areas in the syllabus that you will now have interest to go and read that chapter. Now, this is a very hot slide. What are the governance issues in this case study, right? Now, this paragraph, the board consists of 12 directors, including 4 independent non-executive directors. However, all the other companies in the group consist of only executive directors, and Stephen heads all the board, including the board. Now, what are your thoughts on this? How do you use, so how examiner can use this piece of information for a question? So can anybody can you use the chat option and tell me what are the implications of this? Students, hope you all are there. What are the implications of this? I mean, obviously you will say there's something given. So what? So what? Ask always the simple question. So what? What's the issue? So I'm waiting for your answer and putting down the other point. The other points are looking good. They have an internal governance structure, well-defined roles and responsibility for every constituent of the system. The board delegates responsibility to board committees, so the audit committee, nomination committee, all of those committees. And the corporate governance system demands its employee to enhance their competence, capability level, right, in managing the enterprise and resource effectively with the highest standards of ethics, right? And then the group's code of conduct aims to provide. Now, they also say that they have this code of conduct, right? That really helps them to strengthen the reputation, the standard performance, behavior, professionalism. Now, I really want you to question this code of conduct for a reason. If you know the reason, please use the chat and say that, are you happy with this? And then they also have policies and procedures that govern the timely communication of information to stakeholders. Board of Directors with Audit Committee is responsible to ensure accuracy, timeliness of information that is provided to the board. And then board values the company stakeholders, right? And strives to take their concern. Now, please, you can highlight this sentence. Now, if the examiner wants to explore the area, for example, corporate approaches to corporate governance, it appears that they are using what approach? It's in your syllabus. This is called stakeholder approach to governance, as opposed to shareholder approach or any other approach like financial economics approach. Now, let's use the chat to see your answer. What are the governance implications of what we read before I explain to you? Any answers we got? Yeah, some answers. Dominant person in the board. Let me to ask one question beyond. So what? So what do you expect from governance angle? Yeah, very good. You identified the primary issue. But if you want to expand to construct an answer, or if examiner wants to explore this in little detail, how you can connect this area? That's something that is very important, which I will cover. Now, see some of the governance issue that potentially, some of you rightly mentioned, the dominant role of Stephen, which is also evident by his aggressive involvement in the business, right? And now see this point, this is from the case study. Yeah? He gets involved in each and every decision, right? And wants others to carry out and implement them successfully. Whereas Indira's approach is different. She consults employees, discuss the issues before acting on them. She supports the group culture within the companies that are under her purview. Now, see, additional point is to, in one company, that two leaders, husband and wife, having a different leadership style may create some problem in making board decision, right? So that can create some conflicts in board decisions. It may be difficult to sometimes reach common solution, what we call it consensus. So now one point you to note. Now that is how you can grow beyond this dominant role. And obviously, now you should tell me, okay, now what do you think about the board balance according to corporate governance best practices? How many directors you think this company should have? What? Right? Anyone? I mean, that's a very simple, easy question. Yeah, board balance, role of non-executives, other governance issues. What are your comments? Yeah, now one student says 1/3 or 2. Is that correct? Yeah, very good. One student has mentioned this point, management override of control given the board dominance. It's a very sharp point from Sitara. That's correct. Now, that's how you have to really apply your syllabus topic. Right now, if you go beyond the board dominance, that can give rise to management override of control. I will ask you one more question. So what? That can increase the fraud risk, and that is why in this company you can see the instances of fraud. That may be the reason. See, that connects to fraud risk. So that dominant role, right, of course, this is a family-owned business, but that culture can create. Now, there is a board balance. Some students say the majority of the board should be independent. Still, I didn't get a good answer. Now, see, you are going in different direction. Majority should be independent. There is how many? Some says three non-executive directors, two. Now, let if I ask you this way, if the CEO and chairman is the same person, how many directors should be non-executive? Now let's see whether you can answer that question properly. If CEO chairman is the same person, how many? Now we are saying majority, right? If the chairman is not independent, how many non-executive should be there? Hmm? If chairman is not independent, now you are silent. Now that is where you have to study carefully. Look at the code. Code says not only CEO and chairman is the same. Oh, chairman is not independent. Majority of the directors should be non-executive, and then you apply the independence rule, right? Yes, correct. And that, yeah, now other points, of course, like SID, all of that you can bring in. So these are little things, but really matters. If you don't really focus, you will not get adequate marks. And remember now, what are the things we learn from this dominant? Now we discussed that this dominant, you can direct, get this to different angle. That is what exactly expected strategic level, your strategic thinking also, right? Now, this can affect board decision making in one way, right? And then we also spoke about the board governance issue, the board balancing, and the role of senior independent director, and also write this question that although there are non-executive directors, they will not be able to perform better because there is a dominant person in there, right? So board decision making. Now go through the study pack, right? Factors that affect effective board decision making, factors that inhibit board decision making. Those areas examiner might explore, right? But so far the big corporate governance questions are basic questions, right? But be ready for advanced question as well. Then, what does now this fraud is there in this company, right? Now I want to ask you. Let me. Yeah. Now I want to ask this question. Now this reported fraud in this company, what does it mean to you? Now this can really test your thinking, no? What does reported fraud means to you? I'm waiting for your answer. Let's see the chat. Because this really requires thinking, now for you can't just give an obvious answer. Audit board should be established. Now they have audit committee, right? Why we should establish again? Audit board, what do you mean? Any students? Now this is real case analysis, right? You have to really focus, connect various information and making sense. That's the case analysis. Now, obvious answers are internal control weaknesses. Go beyond obvious. Now, one of the skill in a case analysis is ability to synthesize. How do you connect other information in this case study and then make sense? That sense making exercise, if you do, you are a very good case analyst, right? Now, what you are giving is obvious answer. No, obviously, when there is a fraud, we can say internal controls are weak. But does it also tell you something else? Which can where you can connect to some other information in the case study. Immediate action will take place by chairman with legal will override internal control. Okay. So you are saying chairman will take immediate action, I suppose. Any students, any other answers? Last time I'm asking. Malindu says now role of internal audit committee, internal audit, right? You're asking role of internal. Yeah, that's a good observation. Right. When frauds are taking place, one can ask, where was the internal auditor? What have they been doing? Right? So you will question the effectiveness of internal audit. You will also ask whether audit committee has the oversight. Please write this topic. Audit committee's oversight on internal audit is there in the study text. Please go through. Audit committee oversight on internal control. Right? There may be opportunity and pressure to commit fraud. Very good. Yes, so you can use actually monitoring of this design control. Now, opportunity and pressure, if you can expand that answer to say it's about, is this company, have they done a, now you are applying internal control framework. Have they done a FRA? What is FRA? Fraud risk assessment. Have they done FRA? Isn't that a part of their internal control, the framework, right? Oh, monitoring the design control, right? Now you will see what lot more than what you said in this slide. Let me show that. This is the how you should really apply the case study, right? Now, when there is a fraud, what happens to the statement where they say that there is a code of conduct and people really follow their behavior, professionalism, people. Now, the fraud that is found clearly says that it's a collusion between, right, the store, the manager at the supermarket and engineer and the finance department. See, now when through collusion, if fraud happens, right, with the managerial level people, we need to really question the code of conduct more than, sorry, not the code of conduct, the control environment of this company, the culture of the company, the culture of honesty is there or not. Now see, all these points are very big point. Please carefully note, culture of honesty is there or not is question mark. FRA from internal control angle, have they done FRA? In the exam, you may be asked to do FRA using the fraud triangle. See, the supermarket business, heavily cash is involved. Lot of suppliers are involved. This procurement fraud are very high, like that. You know, the target pressure, things like that. And then if something like this is happening in the company, why it was not come to light? Why don't they have a whistleblower? Now, see, whistleblower is a big topic when it comes to corporate governance. I hope you know whistleblower. If not, please use the chat. Idea of whistleblower is blow the whistle, right? When something is not right, but you are always protected as a whistleblower. Your message will go to the highest level for taking action, right? So that's about, that's another aspect that we need. Okay, why, when this is happening, why can't they detect it? Then come to analytics. Now, how about fraud detection capabilities of this company? Now you look at if the bill is inflated, if they have proper data analytics, if they compare this maintenance expenses across the branches, you may see some branches, this is unusual recurring maintenance. Now the data pattern will show that something is not right. So where is their fraud detection capability as a part of internal control framework? Remember, in COSO framework, one of the principles is that internal control should address fraud risks. So go through internal control chapter, an anti-fraud program. And where was the internal audit? Now most of you touch only the last point, right? Okay, what internal auditors are doing when this is a basic fraud in a branch, no, why it was not discovered? Is audit committee overseeing the internal auditor, where they were? You can also ask why external auditor did not detect it. All of these questions can come. So now that's very important area, because see, examiner has allocated fairly a lot of information about this fraud. And actually, I had a slide that, let me to pick that slide. Until that, I will ask you, please share any thoughts about this fraud. Chamath, you're back, right?
Yes, I am in.
All right. Okay, great. So I'll soon hand over to you. Right.
Definitely.
So wait a minute, I have to add this slide and show. Let me share my screen again. Now this one, a lot of information examiner has given on this particular case. Can you see my screen now? Now, this information in the case study also tells you something else, right? Now they say while there is a ERP, why there is a ticket-based computerized system, right? Now you can question again if you apply COSO framework that how information is flowing, why they use multiple system. That's a different aspect if you want to make use this information, right? The real case analysis is that you make sense out of the information and connect to what examiner wants to explore. Now see this fraud. Outlet manage issue tickets for breakdown. Okay, so when there is a breakdown, the outlet manager has to issue a ticket. Then the maintenance engineer has to look and say, okay, let's go ahead with repair. And then when they do that, the service order request goes to the supplier through SMS and email. We don't know who are these suppliers. Can they be employee of the company? If you want, you can cross-check. So anyway, there is a job card which is done when the service is completed. What will happen when the job is completed? The outlet, again, it comes to outlet manager. He has to approve material used and spent. So we don't know on what basis is going to approve material usage and spent as the outlet manager, but it is also being looked at by the engineer, same engineer probably, and then the completed job with the invoice will come to group finance to process the payment. So this is the flow. Now what is given to us? In the case study, since there is no way to verify the accuracy of information mentioned in the job card, the hours, right now somebody can put X number of hours, we don't know that hours, X number of material, significant, right? And they say there's no way to verify this. The outlet manager together with few officers in finance collude with the service provider and a higher cost is mentioned in each job in order to claim a large amount from the company. Now, this is why I said the question, the culture of honesty, this is happening, right? Through collusion, multiple parties. And then question about their internal control, the fraud detection ability. No, the internal control is a general word, right? You can say their fraud risk assessment, how robust, their analytics, how robust. Now, if you have analytics of this line item in the GL called, say, the whatever maintenance expense, if you can analyze by outlet manager, by outlet, and has it repeated, right? The trend of it. And sometimes you will see red flags if you do basic analysis. This location, always this cost is high. And as you see, this company's cost base is high despite the reducing revenue, especially admin cost, things like that. Maybe this road is a massive scale one. We don't know, right? So now they may also want to do an investigation, forensic investigation into this. What is the role of internal auditor? Now, those type of question may be asked. Why internal control fail? What are the implications? Now, this is a big piece of information in the case study because in summary, this case study says this company has a very good governance, risk management audit. Finally, somebody is commenting about this fraud. So that is an open area for you to connect. Now, if you look at the syllabus topic, it's about fraud risk, risk of material misstatement from fraud risk, the topic fraud angle. Another aspect to this is in the syllabus is about internal control. Another aspect would be audit committee and internal audit. Now see the multiple perspective or multiple lens through which you can connect this fraud. So I suppose you understood. If you have any question, please ask. This is a big piece of information given in the case study. Now, my last segment is to also talk about risk of misstatement, starting from numbers. And I'm sure Chamath has done fantastic analysis of various ratios, and he will cover that. I am taking little part of that to connect it to the risk of misstatement part of the syllabus. Now, we know about the business, the strategy, the background, everything. Now, if you look at the story behind numbers, right? See this information. Now you can do a very basic analysis, right? See the GP margin is dropping at a group level as well as companies. I mean, this is a holding company, but the group as a whole, their margin is dropping. And most businesses about 2% margin drop or 1% margin drop if you go to the segmental analysis. And despite the drop in revenue, you can also see their expense base is rising. Distribution expenses, one might say this is due to inflation. This may be due to the import cost being high. This may be due to some waste that is happening and fraud that is happening. Now, one very interesting thing in this case study, remember one of the syllabus learning outcome for you to analyze, use data analytics or ratio analysis to interpret financial statement in one SL1, one of the past paper, this was tested. And now in this pre-scene also exam is indicating they want to see this unusual sensitivity where a smaller drop in revenue results in a massive drop in profitability. Of course, there will be many factors. Then, like I said, the drop in profitability, expense base, and then another big topic would be that remember the business they are in is that there are many types of inventory in many locations that increase the complexity. And these types of inventory, sometimes it may be vegetables, right? Sometimes it may be some fashion items, right? Which customers don't want to buy now, right? So now, consumer preferences have significantly changed with the increase in what you buy from a supermarket from previously to now has significantly changed. See, the inventory days have increased significantly from 40 to 53, the debtors collection period. What does it mean? Now, please use the chat and tell me. Obvious answer, you will say slow moving inventory, but how do you explain that in a business like this? See this explanation. This is the type of answer you may write in the exam for risk of misstatement. Don't say the inventory period has increased, therefore there can be obsolete, but explain a little detail in the context of the case study. The significant level of inventory across the board because they have a diversified product range, and that is one more specifically the current economic environment where there is a change in consumer demand preference. So the categorization of stock into obsolete or slow moving really becomes a judgmental area in the current economic context, right? Therefore, and that's one thing, and this is really material given the nature of the business, right? Now, this is the type of answer you want to write to get the full marks if examine explore on the assertion. See, the assertion is inventory valuation. The word assertion is very important to your syllabus, right? Assertion is what? Even you see all the assertion connects to accounting standard. This is basically how inventory is valued at cost to NRV, whichever is lower. But then to establish that NRV, you need to really deep dive into business complexity and judgment. The another hot topic, of course, with the current crisis, the debtors impairment can be a big topic, and Chamath will explain to you how reporting standards should be used. And then I mentioned at the start, this related party seems to be significant, right? So sometimes there may be loan, all of these things, disclosure, definite hot topic, transfer pricing, right? So those are some obvious matters. So it's very, very important to know. Remember, your paper is not auditing paper, right? It's a paper where you really apply risk angle, right? You look at the business first. And then while you apply your reporting, see how that business risk is going to reflect in your financials. Think about this risk when you go through annual report of Walmart or Cargill's or any other company. You will see generally companies of this nature, and also using your case study, the pressure on profitability. So that is the context where if you want to write risk of misstatement, number one risk that you may want to write is fraud risk because they are operating under high pressure. And supply chain, these are common risks. Supply chain disruption, credit risk, cash crunch is a big topic. and Chamath will explain it to you this in more detail with his ratio analysis. But I want to ask you from corporate governance angle, if they give a question about board decision making. Now, this type of question not yet tested in any SL1 paper, although the syllabus learning outcomes are there. For example, board decision making, the functions of the board, role of the board, these type of areas may come. Now, in this type of a cash crunch, is it advisable for them to go and invest in a power company from where they're going to get money? That can put further pressure. That can lead to a big risk. Already a cash crunch means one might ask, why not go in concern? But of course, this is an established company. We can't say they are not to go in concern, but if there is any risk to go in concern, you need to be mindful, because that again connects to accounting standard. LK is one, whether there is a material uncertainty or not, right? But the situation can be a serious thing if they want to make investment. And as you know that while government is also struggling, and already in the industry it is well known that the CEB owns billions of money to these energy companies. Of course, now there are plans, but all these are risks that you may want to explore. And we already discussed changes in consumer spending patterns and the impact on inventory valuation, fraud risk we discussed. Cybersecurity, now they are creating many apps, all of these things. Cyber is a really a hot topic. Foreign currency risk. Now, why these risks are important? Talent market, I just put few examples only. There are many. Now, why this is important? You remember from subject perspective, from control or risk of misstatement, we have to start with business risk. In the syllabus learning outcome, there's one specific one, how business risk connects to risk of misstatement. And don't just memorize and write something. Your answer has to revolve around the case study, right? So I'm maybe my last 10 minutes. Please use the chat before I hand over to Chamath, who will give you a very detailed analysis of the rest of the area from financial reporting, consolidation, etc. Now, this is a very good connection, because when I talk about risk of misstatement, all these topics connect to accounting standard in some form. So then you need to really understand the application of those standards. So one problem, if you want to really see the risk in this company, revenue recognition, for two reasons. I haven't put both reasons here. Please make a note. One reason is the complexity. Why? Because the business model is complex. There are different types of revenue, from supermarket, from restaurant, and from agribusiness, and so on, right? And based on these different practices, the revenue recognition can be a complex model applying 5 steps to different businesses, different types of transactions. Second reason, please write the fraud risk. I haven't specifically put the fraud risk is very high in this company. And obviously, another hot topic is revaluation of land and building, significant. And remember the economic environment we are operating. From risk of misstatement angle, you have to use these words, right? In an uncertain economic environment, if you look at SLFRS 13 now, the fair valuation use of when the market is not active, volatile, the fair valuation subjectivity is very high, the judgment involved. As a result, what is the keyword you have to use? Please write estimation uncertainty, EU. That's the word in risk of misstatement. Estimation uncertainty is high. And then inventory valuation, I don't discuss again. We already discussed receivable impairment, learn accounting standard, how expected credit loss to be applied to this case study. I don't want to repeat. That's why I said this is a good connection to what Chamath is going to cover. Investment property valuation. Even if you look at companies like Cargill, they say specifically, while there was a bad time for property business, they say most of the properties are occupied by their own companies, therefore there wasn't a major risk. But again, from accounting standard angle, you need to know when properties are occupied by same companies, how do you account for it in consolidated and separate? Now, these are important topics that you will explore under financial reporting. And especially see this point. Now, if you want to write answer from risk of misstatement, you may write answer like this. subjective nature of property valuation, especially when it comes to investment property. We know there are level 3 assumptions are used, unobservable data, right, which depend on the property location, future net rental, market yield, everything. So these are a simple change in this key assumption will have a significant impact on the valuation. Right, an intangible asset is definitely hot topic. It may be the right, the franchise right to the. I mean, goodwill can come definitely because when you get the acquisitions, or that they are going to acquire loss-making entity, you may see a bargain option, right? Bargain purchase options, how to account for it. Agriculture is definitely another area of application. Now, again, I'm not putting this from accounting standard angle, but this is more from a risk of misstatement angle. But remember, you need to know the accounting standards to explain this risk better. So that's the key thing. So I think with that, Chamath, let's see whether students have any questions. I already touched upon non-financial reporting at the start. And one more thing I want to tell you before let's see whether there are any questions. Before I conclude, one more thing I want you to prepare is ethical issues. I don't want to discuss in detail, but see the application of AAA model or our code of conduct. If there is ethical issue, every exam paper you will get this question. Simply you can answer. These are very easy questions. And like we discussed in the mock paper, I want to remind you the new conceptual framework approach has RITP test, right? And to use professional judgment in resolving ethical conflicts, right? So just a reminder that these are very easy topic you can easily explore. So if you have any questions, please ask. Otherwise, you can anyway leave question to chat. And I hope this explanation focusing on governance, risk and ethics was useful to you. I'm sure Chamath will do a very good job in terms of extending this to the rest of the area of the syllabus, so that overall you will have a very good understanding after this session to really prepare for the exam. So Chamath, I think you can start. If there is any question, they can use the chat and I can respond subsequently.
Thank you, Suranga sir. Hope that, sir, have you conducted the first two slides?
Yeah, I
Before
actually
coming to
covered, so you can straight
okay.
away
Thank you.
start.
Thank you very much. Sorry. Actually, I was supposed to join at 7 and there was some kind of an issue, and that's why it got delayed. Right.
No
Okay.
worries.
So if any, yes, sir.
No, that's okay.
Right.
You can continue. I
Okay.
said I covered that part, so you can continue.
Okay. Thank you very much. Yeah. Okay. I am going to share the slides with you. Hope everyone can see the slides. Right. Okay. So student, it's all about Safeway Holding. So this time, basically, so let me open the chat box as well. Right. So if you have any questions, students, you can share it in the chat box. But time to time, I will look at the chat box and I will give you what is required. What are the required things from your questions, right? So a student, basically the pre-scene, if I comment something about the pre-scene, this is one of the shortest pre-scene that we have came across in SL1 history. So earlier in last time also we had a pre-scene like 15 pages, and this time it was reduced to 14 pages. But in terms of the information wide, I would say this pre-scene is having more than enough information to test number of questions in the part 3 or the part 2 or the question 3 in your paper. So here, student, what I want to tell you is basically there are some disclaimers that actually I wanted to make at the very beginning. So here, as you all aware, So here we only see the, right, the iceberg, the top part of the iceberg. We don't see the bottom part, which is the unseen. So with that pre-seen actually, so this is, let's say, the pre-seen. Obviously, we have the unseen comes in. Maybe what are the things that we are discussing may not be the things which is going to come in or which is going to come in the exam. Maybe the things would be more than different than what we are discussing. But anyway, if you think about, I am not commenting on the last time paper because I think both myself and Suranga and other lecturers have told this to institute that the connectivity of the pre-seen and the unseen and the paper was not there in the last time. But I think they have well noted this particular thing, and this time they will obviously think about that, and obviously they will include some questions which is mainly coming from the pre-seen, right? So that is why pre-seen is very much important. So in the section 2, 50 marks, right, you will get this particular pre-seen analysis and the question based on pre-seen. So here what we have to do is we have to go through the pre-seen, and we have to sorry, I have experienced a power cut, and hope now you all can hear me again. Right. So here, student, what I want to tell you is basically when it's come to this pre-seen, so other thing is there are some similar companies. Of course, Surangas has clearly mentioned. So when we read the pre-seen, more or less like the Cargill Ceylon PLC comes to our mind, as well as if you think about the Vision and all those things, the basically the Walmart is comes to our mind. But don't too much stick to on those information, and don't go and try to read annual reports of that particular company. So whatever the things that Suranga sir has brought in is more than enough you to get some kind of an understanding what is going out there in those companies as well, right? So anyway, this Fernandez family scenario, I think Suranga sir has explained it to you. So any question from this student? Because I can skip. So I think hope you all have understood this very well, right? Hope you don't have any questions with regard to this. And so the strategic journey, basically they have came across starting from 1984, right? And 1985, they have established SW Holdings Private Limited. Initially, it was a private limited, and 1998 was the year that they have converted this private limited into a public PLC. So with that initial, whatever the share issue of 1 billion, which has oversubscribed, and as well as 1992 they have started the supermarket chain. Basically now the supermarket chain is the main revenue generating segment of this particular group, right? So if you go ahead, 1998 was one of the important year for this entire group. Why? A lot of subsidiaries acquired in this particular year. So whatever the funds they have received from their holding or the initial public offer, they have established some subsidiaries. Safeway Manufacturers and Distributors Private Limited, Safeway Hotels and Restaurant Private Limited, and they have acquired some 2 other subsidiaries in this particular year. So all the funds are from holding, right? Then 1990, again, they are going to acquire, and they have acquired another hotel, right? Which called Coral Beach Bay Negombo Hotel. And in 2017, they have came up with a new plan to invest in a mini hydro plant, incurring 250 million. So now in 2022, so they have basically invested in another company called Express Mart Private Limited. So those are the historical milestone of this particular company. So why I have taken this out, basically, these informations are very important you to understand what group structure is. So here you have the group structure. Basically, I don't want to take you the group structure in detail. So when it's come to group structure, you have the ultimate parent or the Safeway Holdings at the top, and you have 4 subsidiaries, and another 3 subsidiaries. And basically, if you look at the subsidiary here, the retail segment represents Safeway Fresh Mart, right? Retail segment. And here, manufacturing and distribution segment another subsidiary, and hotel segment, another subsidiary, and Express Mart, again representing the retail segment. So I am not going to take because I believe that standing about into a one page or a one slide, just because if you go through the whatever the pre-scene, this information are here and there in different places, and it is not easy to identify a group structure at once by reading the pre-scene. Very difficult to identify because there are a number of subsidiaries and sub-subsidiaries and number of relationships are going there. Even in some subsidiaries, the shareholding percentage is not expressly mentioned. So let's say SWHR, Safeway Hotels, they have not expressly mentioned what is the shareholding percentage, but by look and feel, or we can assume like it is also like 100% subsidiary. But here in this particular subsidiary, they are mentioning 80% holding is only there for the parent company or the Safeway holding. The 20% is invested by Albert Edri Wickrama, one of the best friend of Stephen, right? Other than that, very limited shareholding information are given. So by looking at this group structure, I don't think that we can compute the effective holding for the entire subsidiaries in this particular group, right? Other than that, in this particular group, we have a training institution which is non-profit venture, right? Which is mainly targeting on youth development and some employment training kind of thing in some unprivileged youth in some maybe rural areas. And in here, Safeway hotel segment, we have some kind of a diversification, even though it is a hotel segment, right? So we have a mini hydro power plant. Anyway, the main reason for that, initially there was a project that they have planned in Haputale, but it was postponed due to COVID-19. And now they have a different plan to go ahead with this mini hydropower plant, and now they are having they are going to relook at that particular project, and they are going to completely change and completely going into a new business segment, which is power and renewable energy, right? So that is the group structure at the moment, right? So here you have list of KMPs, not that much important. I think Suranga also have mentioned some of the KMPs. Basically, if you can see, there are some directors starting from Stewart and audit committee chair and nomination committee chair, and there are some directors. Then they have Indira, the wife of wife of Stephen, as well as then Remington Fernandez, the son of Stephen, and Charminda De Silva, Group Project Manager, Nalaka Mendis, Group Head of IT. So these are the KMPs that you have at the moment. So I have mentioned their experience as well. Not that much important, but this is again like a summary that they have given in the pre-scene. So no need to look at these things in detail, and because everything is already mentioned, no one is going to look at what is the qualification, what are the qualification of Stephen or something like that. But you have to keep in your mind. So there are a list of KMPs given in this particular pre-scene, because maybe they might ask for a question from LKS 24 related party transactions. In that case, these KMPs might be important, right? Okay. So anyway, these slides have been completed by Suranga. I'm going to the financial reporting part directly. Right. So one of the important thing that I want to mention is there's a separate section, of course, given relating to financial performance of the company. So Anush Amaratunga, the group financial director, by looking at 31st March 2022 financial statement, he is commenting on the performance of this particular company. So when it's come to the performance of this particular company, the most the dangerous thing is we see some going concern issues when it's come to this particular indications, right? So here, the first what they say, the worst performance is the inception. Worst performance. So here, the company has formed in 1984. After that, they say this year is the year where they have the worst performance ever. Another thing is poor performance. If you look at the financial statement, if you have done a ratio analysis, if you have done some other close look at on the segment note that they have provided, so you can see whatever the key indications, let's say KPIs relating to financial statements have not that much performed well. So let's say profit after tax 54% decrease, gross profit 18% decrease, revenue 1.44% decrease. Every indicators starting from the top line revenue and the bottom line profit after tax in decrease. So that is the problem. Maybe they are giving a reason for that particular thing as well. So they are saying one of the most of the business are coming from retail, right? Retail business. And as you all aware, with the ongoing economic crisis, retail industry is one of the main industry that is affected by with the inflation. The amount that we can spend on maybe some items will be reduced. In that case, the retail industry, those let's say supermarket, will be badly affected. So if you let's think simply, student, if you are going for a supermarket, maybe now just because of the crisis, you might not go to the supermarket. You might ended up with some other place to buy vegetables or something. So that is the situation in the country. So anyway, that might be the reason that mainly this company is not performing well. Why? The most revenue component is coming from the retail segment. I will show it in a subsequent slide, how the segments have contributed to the overall profitability of the company, how the segments have contributed to the overall revenue of that particular company. So when it comes to this, again, they are mentioning economic crisis, ongoing economic crisis. And again, they are mentioning the group is heading towards severe cash crunch or cash flow issue and working capital crisis. So when you read and when you look at this red color word, what comes to your mind? So of course, there are some indications. So let's say impairment, let's say LKS 36, LKS 36, you should have some impairment indication to go ahead with impairment, right? So what are the impairment indication? It might be internal or external indication. So here, you have some internal indication, poor performance, external indication also there, right? So likewise, the both indications are there, and there might be some impairment requirement. Especially you go and look at the trade receivable balance, how it has increased. You should have done some additional impairment. So if you go and look at the inventory balances, how it has increased, maybe they are having a policy to keep the buffer stock, right? As they have expressly mentioned in the pre-seed, they are having a policy to keep buffer stock. But still, when they have buffer stock, they have more cost. Maybe some holding cost might goes up, as well as slow moving stock provision. Likewise, there are a lot of issues, right? And when they have the buffer stock, unnecessarily the cash flows are tied up in that buffer stock or the stock amount. And that is why the main reason that the working capital crisis also there. So in that case, student, you can see, of course, this particular is going on working capital crisis. I will show in subsequent slide with ratio analysis and everything, what are the main issues when it comes to this particular company working capital management. And here, what I wanted to emphasize is when it comes to going concern, student, as you all aware, as per LKS 1, you have to give a separate disclosure, or you have to perform a going concern assessment in every financial year. So here also you have to perform a going concern assessment. And when performing going concern assessment, these points you have to address, and you have to give, right, as company, you have to give how the company is mitigating those things. Why I am telling this, student, last paper also, I think you can remember, they have tested your disclosure knowledge. They have tested your disclosures knowledge. In the question number 1, they have tested your disclosure knowledge. And as per the examiner comment, that is the question most of the students have not answered very well. So in that time, this time also, they might ask, if it is a going concern issue, what are the disclosure requirements? And there's separate publication given by CS Sri Lanka as well. When there's economic crisis, when there's a problem in a country like this, what are the disclosures you have to make? So I think you all have downloaded that particular document. If it is not there, it is available in CA publications. You can go and download that particular document. There are some specific disclosures that you have to make in a economic crisis or an economic recession like this, right? So here, again, going forward, so keep that in your mind. The going concern is one of the things that they might test. And here, this is how the segmental financial performances are. So anyway, in this particular pre-scene, they have given the segment information. They have divided into 4 segments, right? And they have basically not mentioned how they have segmented. Maybe they have used the 10% rule or 75% rule. Any information is not provided that much, but still they have given. I don't know the accuracy in terms with accounting standard provision when it's come to this segmental not. But still, because if you can clearly see, right? So here you can see the revenue and all the things are not more than 10%, but still those are going to be shown as segments. But as per in line with the segmental requirement in SLFRS 8, these segments might not be actually recognized as operating segments separately, right? So anyway, what I want to mention here is when it's come to the group revenue, you can see the 73% revenue. 73% revenue is generated through the retail segment. Obviously, it should be there. Why? They have more than 300 plus supermarket chain in 25 districts, and that is why they are considered this retail segment, including the supermarket, is one of the main revenue generator. 73%, right? 73%. And then the next main revenue generating segment or the cluster is basically manufacturing and distribution, which is 23%, and restaurant only giving 4%, and power segment is 0.1%, and other segment 0.1%. And here you can see basically when it's come to the profitability. So you can see here you have the profitability. Retail segment contribute 81% of the profitability, but manufacturing segment only contribute 19%. So what you can judge, basically what you can think based on this information. So when it's come to retail segment, by having 73% of the revenue, they are earning 81% of the profit. It means the retail segment is more profitable than the manufacturing and distribution segment, because even though manufacturing has 23% revenue contribution, profit contribution is only 19%. So that is why I'm saying retail segment is the most impactful segment in this particular business. As well as if you go and look at the financial statement, anyway, I have shared the ratio analysis also with you. I'm not going to go through the ratios in detail, but I will show you and I will give you a picture about profitability, liquidity, and gearing and everything. But I want to tell you, if you closely go and look at the ratios, you can see trade receivable of the retail segment increase, trade payable increase, inventory tied up, inventory increase, right? And all these are saying what, right? PAT dropped by 55%, sales dropped by 2%, cost of sales increased by 1%, overhead remained, even the revenue dropped. That is the most dangerous thing. These companies, or not even this company, right? Not even this retail segment, other segments also, the overhead remains same. Maybe the overhead, the salaries and other fixed costs. Right, when the revenue decrease, overhead is not going to change. Then what is happening, student? Ultimately, profitability will be affected. So revenue decrease, cost of sales increase, and this side overhead remain unchanged. Ultimate profitability will be obviously reduced. Another thing is, if you clearly look at the financial statement, you can see even though the profitability is down, even though the revenue is down, but still they are keep investing on us. So if you think about this retail segment, asset grew by 16%, right? And borrowing, interest bearing borrowing grew by 32%, right? And here you can see asset grew by 24% and PP 32%. Here this one, restaurant, asset 7%, PP 53%. So anyway, even though they are struggling, but still they are investing on property, plant and equipment and other total asset. Maybe just because of two things, right? They might think this shock is a temporary thing. Anyway, it's a holding company which having number of business segments. They might think that this might be a temporary situation and the things will be, the recession or the crisis will be over, let's say after 1 year or 2 years time. Then we have to develop our assets continuously. After the crisis, we have to cater the market without any interruption. So that might be the initial thinking. Other than that, they don't aware about what's going on. Other reason is maybe they don't aware there's a pressure coming from the revenue, and still they are continuing the asset improvements and PP addition and all those things, which will not bring you a good result end of the day. Obviously, at the moment also they are having some kind of a cash management issue. They are having low cash. They are more into borrowing. In that case, what is happening? If you are going to invest more and more assets, what will happen? The cash crunch will be severe, cash problem will be severe, and they have to get more borrowing to fund those PPE and other assets. Then what will happen? Did that the gearing will be not that much good in terms of the entire performance of the company, right? So these are the implications that they have. So here, student, what I want to tell you is normally, so here the power segment power segment is a loss-making segment, right? So, but even though the power segment is loss-making, there's a reason for that. So let's say I will share my practical experience with you. So I am having a solar panel in my house, right? So what I do is I will sell, right? Whatever the excess unit. So let's say I am using 400 units per month. I am using 400 units per month, right? Electricity unit per month. Let's say I am generating 600 units from my solar panel system. So in that case, what I do is keeping 400, the remaining 200, I am giving to the national grid. So for that, I will get 1 unit 22 rupees each. 1 unit 22 rupees each. But normally, if you are going to take the electricity from the national grid, let's say 500 rupees per unit. But CEB only paying you 22 rupees. So what I want to tell you, normally student, this power segment is loss making just because now initially they have established this particular hydropower plant, right, just to get the electricity for their hotel project. But now the hotel project is not there, but the power plant is there. They are selling electricity to the CEB. Selling electricity to CEB is not profitable. But if you want to make it profit, you have to use that electricity. Then whatever the cost, electricity cost that you can save is higher than the revenue that you are getting from selling that particular electricity unit to national grid. So that is what I want to mention. That is why basically the segment is loss making. Other than that, we can't say the energy or the renewable energy or any other energy project is loss making, but that may be the reason for loss making kind of a thing. I don't know, but based on the general things that I have expressed this particular view, right? Going anyway, other segments they have not specifically mentioned about other segment. Maybe they have mentioned there's a rent income coming from Cinnamon Garden property that might be included under other segments. Anyway, no, that much information has provided, right? So those are segment kind of information at the moment. Ratio analysis. So last time paper, I think you all can remember, student, normally in SL1 paper, ratio analysis is not tested. So ratio analysis question is a big question is coming in CL2 paper and not in SL1 paper. But still in SL1 syllabus, the ratio analysis is included under financial statement analysis. So that is why last time also they have tested the gearing and the profit, gearing and if I'm not mistaken, the gearing and the profit, I can't remember actually. So two ratios they have tested. So in that case, student, what I want to tell you is now in this time also, they might test, right, some ratios. They might test some ratios. So prepare on that, do some basic understanding on the ratios, right, and go to the exam. Because I believe this time also, maybe the profitability ratios, because the profitability of this particular company is highly debatable, that might ask, and liquidity, that also might ask, and gearing, that also might ask. So I think very important, right? So here I will give a brief introduction about the profitability. I am not going to in detail ratio by ratio, but I will just give you a brief introduction. You can see the gross profit margin and net profit margin. We'll take these two key ratios. You can see the gross profit margin has reduced. Net profit margin also has reduced. Why? The gross profit margin has reduced due to severe reasons. What are the several reasons? The first one, revenue drop, cost of sales increase, and overhead remains same. So let's say those three reasons, mainly those three reasons has reduced the profit margins, right? Profit margins. And other thing is the return ratios. So return ratios, what is happening? ROCE reduced, ROA reduced, and ROE reduced. So every return ratios are also reducing. Why? Return ratio reducing just because of two reasons. The first reason is your profitability reduce, and your base, let's say asset base, or the total equity base, or the total debt base, those bases also increasing, right? Those bases are increasing. That is why the profitability return ratios have given this much of low figures, right? Then come to the ratio, and I think someone has so mute your mic, students. Please mute your mics. Right. Ratio analysis for the leverage. So if you think about the leverage, so leverage, anyway, this company is a high geared company, right? So you can see the ratio is more than 100% debt to equity. So leverage increased, right? And here also you can see interest coverage, a serious issue. Interest coverage has reduced less than 1. It means your profit is not enough to pay off your interest expense. So serious issue. So in terms of the leverage, the company is in a serious issue. High borrowings, which ultimately lead high gearing, as well as high borrowing, which incur additional finance cost, which will reduce the interest coverage times as well. So if you think about current ratio year on year, there's not that much of a change, but still the current ratio is well below the industry benchmark. So normally we say the current asset ratio should be 1:2 and quick asset ratio should be 1:1. That is the ideal benchmark, but still you can see the current ratios and the quick asset and the current asset ratios are lower than the acceptable level. It says companies having some kind of a issue with paying short-term obligation and short-term liquidity. Of course, you can further elaborate this in terms of asset utilization ratios. You can see the debtors resident period increase. So when the debtors resident period increase, the ECL requirement will come. Creditors resident period increase. When the creditors resident period increase, what will happen? Suppliers and the creditors will lose faith on yourself. Some of the suppliers might be farmers. What will happen to farmers if you are not paying money to them well on time, right? Just think about that. So here inventory resident period also increase, right? So anyway, the operating cycle increase and cash cycle is minus. That is why they have the cash crunch and it is increasing, right? Minus cash cycle means every time you need to borrow funds. It is not a good sign. If you think about the turnover ratio as well, all are not showing good indication. All have increased, right? So all have decreased. So here, in terms of the business performance, obviously, even though it is expressly mentioned in the pre-scene, if you go and compute the ratios also, you can see the business performance are not that much good in this particular year. And investor ratios, they don't have that much of information, but investor ratio, let's say earning per share reduced. Anyway, net asset per share has increased, but earning per share reduced. Anyway, investor ratios, not that much information is given, and you also no need to worry that much when it comes to investor ratios, right? Then I have given you a common size financial statement as well. I have used this to give you the reason for low profitability. So you can see, right? So you can see the revenue. I have given 100% to the revenue, 100% weightage to the revenue. Then you can see cost of sales. You can see cost of sales has increased and overhead remained unchanged. And you can see the finance cost. Finance cost also increased. So those are the main reason in this particular year they have low profitability, right? So any questions up to now, students? Any questions up to now? Any question? Let's see the chat box. Any questions? Any questions, student? Right. So I am going to give you the predictions, basically. So what are the things that might come to the exam, right? So I am going to give some predictions and analysis based on the briefing. So here, anyway, accounting standard questions, obviously, and consolidation questions and RMM questions Indonesia has covered. So I'm going to cover up these two things. So what might be the questions coming from accounting standard? So I am going to take you through this table. So it says in the pre-scene, SWH Cinnamon Gardens investment property. So they are having, the holding companies having a Cinnamon Garden investment property. They have rented out to subsidiaries as well as some other external tenants, right? And here the fair value gains of that property also included in the group financial statement. So it says the group is at the moment operating some kind of an investment property and carry out this business. In that case, what will be there? LKS 40 question from LKS 40 can be tested. Investment property question can be tested. But you have to keep remember, so when it's come to investment property, if you have rented out for its subsidiaries, right? If you have investment property, you have rented out in for your subsidiaries. When it's come to consolidation, it is not investment property. It is property, plant, and equipment. So keep that also in your mind. Then the next one, rewards to the loyal employees every year. Steven does not tolerate fraudulent activities and immediately fire concerned persons after setting all legal dues. So here they are mentioning about they are really appreciating the employees and they are rewarding employees. So when it's come to employee rewards and everything, what are the standards that might come? So maybe when it's come to employment benefit, LKS 19 and SLFRS 2 also might come share-based payment. But here, I don't think that share-based payment will come, because when there's a share-based payment, they have to give some shares to employees. They have to give some shares to employees. But Steven is saying firmly, they don't want to dilute their family ownership. Now, at the moment, they have like 50, they want to increase it to 60. So they will not go for a share-based payment, which ultimately dilute their own family shareholding. So in that arena, what I will say is, if a question come in more or less, LKS 19, employment benefit question will come, right? So when it comes to employment benefit, as you all know, there are few benefits. And anyway, I have given these areas that can be tested only by grabbing the words in the pre-scene. Don't expect that every standards will be tested for your paper. Another thing is, here you can see they are firing their employees. If something is there, any fraudulent activities there, they are sending their employees without any second thoughts. In that case, what will happen? That employees who are fired might give or might have some leave, or maybe they are going to going with courts to have some legal charges against the company. So in that case, obviously you might have to decide whether we are going to make a provision for this, whether we are going to make a contingent liability treatment for this. Likewise, whether it's a liability for legal unresolved legal cases, right? So the legal cases might be there. That is why I have incorporated LKS 37 here. So when it's come to LKS 37, I forgot to mention, obviously, LKS 10 also linked with LKS 37, because when it's come to undecided court cases and everything, the LKS 10 also having some kind of a bearing. Maybe today's the reporting date. After that, court hearing is there and the decision coming out, whether it's adjusting or not. Likewise, LKS 10 also having some kind of a bearing. Right. Here, then, the next one, 50% acres of land, small factory manufacture dairy products, and SWSM, the supermarket arm, invested in purchasing farming lands in rural areas. So here what you can say, this particular pre-scene, they are speaking a lot in terms of agriculture, right? Agriculture. When we say agriculture student, LKS 41 is highly likely to be tested. And other side, when LKS 41 is there, LKS 2 also attached to that particular standard. Why? You know, at the point of harvest, agricultural produce becomes inventory after that, right? At the point of harvest, it becomes agricultural produce. Soon after that, it becomes inventory, and which is going to be treated under LKS 2. And one more thing, student, this LKS 41, last paper also they have tested. Last paper also they have tested. But don't think, yeah, right, you can think in two ways. Just because last paper it was there, this time it will not come. On the other hand, you can think, just because last time is there, this time also they will test. So yeah, you have two options. But anyway, don't get into that kind of a prediction. There's no pattern in the questions coming in history on the past paper. So here, just because this pre-scene and this particular pre-scene is talking about the farming lands and agricultural kind of a business, obviously LKS 41 is one of the highly testable standard, right? Maybe LKS 14 might not be tested, maybe LKS 19 might not be tested, but 40 is one of the top alarming standard in this particular pre-scene. Then SWH is a diversified holding company, and I told you earlier as well, in this particular annexures in the pre-scene, they have given some segments, but still, when you look at the segments, how they have categorized, how they have selected operating segments, because some of the operating segments are not significant. Let's say power and some other segments, some power and hotels are not significant, but still they have showed it as a separate operating segment. So in that case, SLFRS 8 might come, and they might ask to prepare a operating segment note, or the segment note, or the reshape the segment note based on the information which going to provided in unseen, right? So that also might be a possible question. Then they talk about exclusive global franchising right. So they have obtained franchising rights. So let's say Cargill's, they have KFC, similar. Here, this holding company is going to obtain a franchising right. So actually what I thought was, when we say the franchising right, two types of questions can be asked. So when it comes to franchising right, the company who is providing the franchising right, from their side, SLFRS 15 is the treatment to recognize the revenue from this franchising arrangement, right? So maybe just because of this franchising, we have to give a royalty to them. So royalty, the royalty revenue recognition of that particular company who has provided the franchise, right, might be, right, franchisor side might be tested. And other than that, in our side, we are the franchisee. In our side, LKS 38, because franchising right may be considered an intangible asset. In that case, right, so LKS 38 treatment can be tested, but very remote kind of a possibility, this type of a question will come to the exam, right? Anyway, then this one, I guess, this is somewhat important area you have to pay focus. So you can see in the entire pre-scene they are talking about, they have gone for northern areas and eastern province, and they have set up some supermarket. They are into rural farming community. They have given some training to the farmers. They are giving some employment opportunities, and they are providing some advisors, and they have a training institution as well. And more or less, in the balance sheet, there is a capital grant amount including, right? Capital grant amount including. So this grant might receive from the government, maybe establishment of a factory or something. So in that case, student, LKS 20, the government grant can be tested. And this is one of the standard which has not tested in SL1 paper. And there's a possibility to test from government grant in this particular scenario, right? Then IT-based agro app, Industry for Technology, and Technology and Research Department is there, and it is headed by the Steven's son. You can see how the technology and research and development is important, because Steven has appointed his son to take care of that. In that case, they are into more or less development of technology, IT based, everything, right? So in that case, what comes to your mind? So these are intangible assets, intangible assets. So most of the intangible assets can be internally generated intangible assets. So in that case, so you have to be address this particular issue. And here you might have some research and development cost. Since it was there in the last paper, you can assume it may not test it, but still you have some kind of a probability to test this kind of a question. So LKS 38, recognition or non-recognition of internally generated intangible assets. You know, internally generated intangible assets you can't recognize. The only instance that you can recognize internal generated intangible asset is business acquisition under SLFRS 3. Other than that, you can't recognize. On the other hand, research and development cost. Research cost you can, of course, cannot recognize. You have to channel it through P&L. But development cost you can recognize in and capitalize. So likewise, that knowledge from the LKS 38 might be tested by combining with this app or technological or industry for technology. That's some kind of a thing, right? Going forward, so they have mentioned about this mini hydro power plant. So when it is started in 2017 and completed in 2019. So if you think about the mini hydro power plant, it is a qualifying asset, which took a substantial period of time to get ready for the intended use. So this qualifying asset, anyway, they have spent 250 million, a large amount, and for this qualifying asset, they might ask for borrowing cost capitalization. So LKS 23 also not recently tested, right? And they can combine LKS 23 with LKS 16. I am telling every time normally, if it is a question from LKS 23, obviously they will combine. Normally, if it is a small standard, they will definitely combine 2 to 3. Let's say LKS 37 might be combined with LKS 10. When it's come to LKS 16 might combine with LKS 23 or LKS 36. Likewise, there might be a combination when it's come to this question. Anyway, you can say PPE revaluation also there. So I believe there's a high chance that they will test a question from property, plant and equipment standard when it's come to this particular paper that you are going to face. Then the next one, company has faced worse performance, and I have already communicated this severe cash flow issues just because of that LKS 1 and SLFRS 7, right? FLFRS 7, liquidity risk disclosures, credit risk disclosures, right? So like by market risk disclosures, that disclosures might be tested. So where you have to look at the disclosures, can you go and look at it in the study text? No, you had to report one, or you had to review one of the, or you had to go through one of the annual report of a reputed company to see how to prepare a disclosure. So last time paper also you had a disclosure, but very few has prepared the disclosure. So you had to pay attention. So this time also I believe a disclosure kind of a question might come. It might be a disclosure from risk management. It might be a disclosure from related party. It might be a segmented reporting disclosure, but anyway, the disclosure kind of a question is highly probable because the examiner knows students are not good at disclosure preparation. But as a student in strategic level, we expect you to prepare disclosures whenever necessary. So here, the other one is the Fernand's family is having a domination, right? And related party receivable also increasing. And that is also one of the reasons that I can tell LKS 24 related party transaction also might be tested. Normally in a family business student, when it's come to related party transaction, there might be some issues. Here, the family dominating company, the related party might have some issues, right? So here, as you all know, the board balance, the independent non-executive directors are not adequately there for subsidiaries. So in that case, the domination is there, right? Domination is there. Whatever the Stephen and other family members are dominating the business, of course, there might be a question from 24. And then the next one, SW, this is some of the remote kind of a situation that I have thought of. SWMD, the manufacturing and distribution arm, they are into chocolate, they are having a chocolate manufacturing company, right? Chocolate manufacturing company, and they might import raw materials for chocolate manufacturing, maybe the cocoa and other things they might import. In that case, LKS 21 might be tested. Anyway, better you go ahead with LKS 21, not even for this particular section, maybe in the section 1 also, they might test LKS 25. Last paper also, you can see the LKS 21 is there. And here, if you think about the ongoing economic crisis as well, we have a problem, right? During today, we have a problem, economic crisis as well as inflation. So that is why I believe normally LKS 21 and LKS 29, hyperinflation economies can be tested at least for a small question. So be mindful on those things as well. Anyway, student trade receivable and inventory impairment, of course, even PPE and other impairment also might be there, LKS 36 and LKS 2 inventory impairment and SLFRS 9. Keep remember SLFRS 9, when the trade receivable comes, you have to apply simplified approach, not the LGD-PD general approach, right? So here, okay. So that is what I think the possible accounting standard. So just keep eye on this particular accounting standard. And if you have not gone through this standard at the moment, just revisit and see whether you have covered the standard. Basic theory parts are very important. Most of the time, you are not getting marks because you don't know the basic theory, right? So if you know the basic theory, you can get some marks in this particular theory-related financial reporting questions, right? Okay. Now, I am going to discuss what kind of a consolidation question might come. What kind of a consolidation question might come. So before moving to the consolidation question, so we will discuss about what their growth, what they are into, and what their plans are. The first thing that I want to tell you is consolidated balance sheet is given. So here you have the group balance sheet. If you go to the annexures, they have given the group balance sheet. And the group structure also complex, right? And holding percentage not given. So what I want to tell you is, a student, I don't think that they will give the details of the other companies, then they will not tell you to prepare consolidated statement of financial position. So consolidated statement of financial position is already there. And the thing is, they will tell you to acquire something or add it, and they will tell you to correct some misstatement. Let's say they have acquired a subsidiary, it was incorrectly consolidated. So they might tell you to correct it. Likewise, that kind of a question will come. So go to the last paper as well. Just see what kind of a question that they have tested. So don't expect you to expect examiner to come and tell you prepare the consolidated financial statement. I believe that kind of a question will not come. So last paper also they have like 7 sub questions. how to address, how to account for associate, how to account for contingent consideration, how to account for contingent liability. Likewise, you have to advise. And believe me, student, consolidation question will come on advice or tier 5 action verb normally with a tier 5 action verbs, and you have to write something rather than preparing. So that is why I say they don't want you to prepare a consolidated balance sheet, incorporate indirect holding and everything, but they will give, yes, you have the consolidated balance sheet, and here you have a new subsidiary, add it. Likewise, that kind of a question is highly possible for this paper. So here I will read this point as well. Stephen mentioned that opportunity should not miss. Only way to success it. Opportunity should not miss, right? And only way to success is risk-taking approach. Obviously, they are into risk-taking approach. It means they are not risk-averse approach. Risk-taking approach means definitely they will go and acquire more subsidiaries, more associate, and they will invest more. That is what we call risk-taking approach. Even we are in economic crisis, they will go and acquire. And the pre-scene is expressly mentioned. The company, most of the companies that they have acquired already also, when they have a financial difficulty, when they have a financial issue, the Safeway Holdings go there and acquire that particular company, right? That's what they did. And they have put intention also, if a hotel is loss making, we will acquire, right? If a wind power plant, solar power plant is loss making, that particular company we will acquire. So that kind of a mindset they have, acquisition mindset, right? It's risk-taking approach. And they are having the Stephen also is strategic leader, visionary leader. He always wanted to grow the business, right? So anyway, he is not like, okay, I am going to sell the business. I don't want, no, not that kind of a leader. He always wanted to have a growth in terms of his business. So best strategies to increase acquiring and merging with existing companies. So they are into acquisition and mergers. The danger is acquisition is covered under SLFRS 3 and SLFRS 10, but merger is not covered under SLFRS 3. Merge is having a separate statement of recommended practices. So, but I don't think this will be tested from you, statement of recommended practices, because it is not included in your syllabus as well. But still, the acquisition might be highly possible, right? Then going forward, in 2007, Break-in Group investment policy, acquisition of mergers. The first time they invested in mini hydro power plant, right? So anyway, this mini hydro power plant project, now they are going to revisit, right? They are going to revisit this one, and they are going to think about diversify and acquire more loss-making and wind power and solar power companies. So they are in the acquisition mode rather than disposal mode, right? And the other one is they have given the final part of the pre-scene, they have given Expressmart Private Limited acquired, and that particular company had financial difficulties, and the final price negotiated was 711 million, and offer is too expensive. So if the offer is too expensive, right, and the financial director is arguing offer is too expensive, where is the goodwill? If you go and look at the goodwill in the group financial statement, the goodwill is not there. But if the offer, if the purchase consideration that you have paid is expensive, means expensive term is defined in terms of the fair value of the net asset that you have acquired. It means goodwill should be there, but goodwill is not included. So shall I tell you one of the possible questions that might come to the exam? They might tell whatever the group financial statement that they have prepared at the moment, not include Expressmart, and they will give you Expressmart financial statement, and they will tell you to combine the Expressmart financial statement to this group financial statement. So in that case, Expressmart goodwill computation you have to look at, and other things that you have to look at. Likewise, you have to add this to the current balance sheet given in the pre-scene. So I really want you all to go through the last time paper, because last time paper also similar kind of a question. They had the group and one subsidiary is adding. So this time also that kind of a question, highly probable. So go to the last paper and do that paper, and before going to the examination. So I am insisting you. And here you can see SWHR was established in 1990 to acquire merger loss-making restaurant. So anyway, so they are having a subsidiary who is willing to acquire loss-making restaurant. They are going to have some subsidiaries, have some company who is going to acquire loss-making wind power and solar power companies. So all are restricting, all are in growth mode. So if you closely look at the entire pre-scene, rather than the severe cash flow issues and the economic crisis going on at the moment, what I would say, rather than these 2 points, the more points are there to acquisition mindset, not some kind of a de-investment mindset. So you have to keep that in your mind. So most probably, let's say 75%, the acquisition kind of a question will come. Let's say only 25%, the disposal scenario will be tested. So that we can judge. But don't blame me if you go to the exam and if they have tested the disposal, don't blame me. But I would say, based on the information in the pre-scene, I don't know what is coming in the unseen, but based on the information in the pre-scene, that is the most suitable scenario. Someone might think they will dispose that Haputale. Anyway, the Haputale, whatever the hydropower plant is not a subsidiary anyway. You don't need to worry. It is not a subsidiary, right? It is just an investment, right, made by a subsidiary, not a complete separate kind of a company. So anyway, don't think that they will dispose one of this arm, right? Right. And possible question. So I have basically given, I will give you basically 3 areas that possible question might come. I have already mentioned. This is like a summary. The first one is like acquisition. So there can be acquisition of a new company, most probably step acquisition. First, you will acquire more than 20% and become an associate, or you will have a joint venture. Then that is becoming a subsidiary. So likewise, the further acquisition kind of a question will come right here. Then it can be a power industry company. They will acquire power industry company. Why? They have intention to go to power and energy sector as well. And they will acquire another company retail segment, because recently also they have acquired a company retail segment, and here this retail segment can be EML, Express Mart Limited. And forward or backward integration. What is mean by forward or backward integration? So this is a company who always thinks about the supply chain. So as you all know, to continue the supply chain, they have acquired some farming lands, right? They are doing cultivation to ensure the continuous supply chain is there. So in that case, forward integration means they will come forward, and this supply chain, the forward side, there may be some distributors and some outlets and everything, they will acquire that side as well. Backward integration means they will go down, they will acquire some land from the farmers, they will acquire some farms. Likewise, they are going to downward integration as well, backward integration as well. So likewise, they might acquire some companies from completely different industries, because they are into diversification. In 2017, they have invested in hydropower plant, which is not in their business line, but still what it says, they can go for any business. They are having the mindset for going for any business. So any kind of a segment that can come as an acquisition. And disposal also can come. So I will say partial disposal, maybe when it's come to hotels. So when it's come to the current situation of the country, student, the tourist arrivals are very limited. If you think about the 2018-19, the tourist arrival before the Easter bomb attack, tourist arrivals are like 250,000 per month. Now it has reduced to 42,000. Last month it was like 42,000, right? So here, just because of the reducing tourist arrival, the hotel industry is one of the mainly affected industry. So if it is a disposal, I think they will not dispose the retail arm, they will not dispose the manufacturing arm, but they will dispose the hotel in a hotel segment. So that is possible. That is possible. Right. Anyway, get ready for that disposal scenario as well. Let's say 25% probability I am keeping for it. And this is also, I have mentioned, correction of the group financial statement of the acquisition. So they might say whatever the group financial statement, they have already included EML, but the treatment is incorrect. Then you have to correct it, or they have not incorporated EML and you have to incorporate EML by including those figures. So those might be the possible consolidation questions. So here, student, any questions up to now? Any questions up to now? So those are my predictions, basically. Those are my predictions, right? So what I want to tell you is, student, actually, so don't get panic when it comes to the examination. So last time also, if you go through the consolidation question, because I am doing the pre-scene and I am referring to the consolidation and the other parts coming from the pre-scene. If you go to the consolidation question, student, what I felt like that question is easier than the corporate level consolidation question. So the consolidation question in strategic level easier than the corporate level question. But the thing is, you have not read the question well and you have not answered the question well. So consolidation is not all about just preparing consolidated balance sheet or consolidated income statement. It is all about writing. It is all about writing something, right? Writing some theories, make theories relevant to the scenario, right? So that is what required. Keep that in your mind, right? So I want you all to go through the last paper. I want you to all go through the last time paper because it is very much important. And one more thing that I want to tell you, student. So if you think about the last time pre-scenes, when you read the pre-scene, there are some accounting related issues. But here, when you read in the pre-scene, there is no such accounting related issues. Not given as it is. Accounting standard issues not given as it is. But then and there, they have some hints. Only the hints. It means anything is possible with this pre-scene. Anything is possible. Even the consolidation also, lot of things. The last time it was very clear, it is acquisition. But this time it is not 100% clear, acquisition or maybe a disposal. So likewise, this pre-scene is very open-ended kind of a pre-scene and any area can be tested. That now you have like another 20 days for the exam. So here the pre-scene is only one part. Don't spend your entire 20 days for pre-scene analysis, right? So just have an understanding based on the things that we have done so far and just prioritize the standard that we have told here when you are doing your studies. That is very much important. That is very much important. So anyway, you have other 50 marks as well. The pre-scene, this particular question also you have to focus and other 50 marks also you have. So anyway, there's a question. Can you please share the presentation? Anyway, I will share this presentation with the institute and hopefully the institute will share the presentation with you. So any other questions, student? Because that is the end of the presentation. Anyway, thank you for being with us for 2 hours. And my special thanks goes to CS Sri Lanka Education Division Director, Ms. Lakmali, as well as Aruna, who organized this particular event for the betterment of the students. And thank you very much for the CS Sri Lanka as well as the students who are with us today. And I wish you all the very best. And I wish you all the very best and tell you somehow you have to pass the SL1 this time. And because next time onwards, syllabus also need to be somewhat changed and you have to do this time. So keep going and push forward and do your studies and good luck. Thank you very much. Good night, students.
Thank you, sir.
Thank you, sir. Good night.
Thank you, sir.
Thank you.